Hey everybody, what's going on? It's James here with Crypto Common Sense, and I wanted to sit down today and shoot a video talking about, whether or not it's a good idea to get in on meme coins and parabolic moves and coins that I would consider, riskier than normal, if you will. So I'm going to talk about that. I'm going to talk about some things to watch for and how I would personally look to play certain coins. So before we jump into the content for the video, please do me a huge favor, hit the thumbs up button. Make sure to subscribe to the channel if you have not already. And make sure you head down to the description, click that link, and join Patreon for just $7 a month. That will give you access to more frequent updates, additional content, and more importantly, it will help keep this channel going. So I saw some friends of mine who I've known for many, many years talking about Shiba, right? A friend of mine that I've known since I was 15 years old, does not trade, is not a trader, has a regular job making a really good living, but randomly called me this morning and said, James, what do you think about this SHIB coin? And guys, here's what I think about it. Nothing. I don't think anything of it. I don't think it's an amazing once-in-a-lifetime opportunity. I don't think that it's worth sinking a ton of money into and gambling on. I think it's just another coin. And just like, you look at the stock market, there's always another stock. So I'm going to walk through this and explain that does not mean I'm against people trading this coin. It does not mean that I'm against people buying this coin, right? Opportunity is opportunity. The whole point of being a trader, or at least the whole point for me, was to be able to be indifferent to what it is I'm trading and what it is the market's doing, whether it's a bear market, a bull market, a ranging market. I don't want to care. I want to be able to trade all the different conditions, and I want to be able to pick and choose the assets that I trade without caring about the asset itself. So for example, in the case of Shiba, it got listed over on Binance. I guess I don't know a lot about it, first of all, so if I make some mistakes, I apologize. I didn't do any research on it. This is just what I've gathered from people talking about it and me seeing, posts on social media and then friends asking me about it. So from my understanding, it started out as a DeFi token, ended up getting listed on Binance, and of course has exploded from there. So if you look at it right now from its low back in September, so a little over a month ago, it did pump up almost 1,300%, so about 13x. And what that means, of course, if you put $1,000 into it and you were still holding it, right now your $1,000 would be worth over $13,000 because it's up 1,254%. So it'd be worth roughly $13,540. Okay, that's what that means. Really good return if you did that. But why would you do that? Well, I don't know. Let's look. Was there a reason to do it? Maybe. Maybe there was a reason to do it. I look at this, and I wouldn't fault anybody who bought down here. Why not? Well, let's take that off. What is this? This coin was way up here, fell almost 90%, and then ranged sideways. This is exactly the type of coin or token that I would absolutely be okay putting what's called a position trade on, okay? And the type of position trade that I would take on something like this would be maybe 0.5% of my portfolio. So for example, we're just gonna use nice round numbers for easy math. Let's say that I personally had $100,000 that I was trading with. I would be totally okay taking a long position on the retest of these lows, putting in $500 and not having a stop loss. And you might think to yourself, well, that's not trading. If you don't have a stop loss, that's gambling. No, it's not. If you're only using 0.5% of your portfolio to begin with, that is your stop loss. If it goes to zero, you'd lose 0.5% of your portfolio, which is no different than taking a regular day trade and using 0.5% stop loss on that. Let's say that, for example, you got 100 grand, you take a day trade, it's a $100,000 trade. Well, if you have a 0.5% stop loss, that is the same thing. You're risking $500 because 0.5% of 100 grand is 500. That's the same thing as taking a $500 position with no stop loss. So what you do in a case like this is one of the tried and true strategies that I've seen work time and time again is you get long if it comes down and test this, because what is this doing? Think about it. What's it doing? It's ranging. That's a range. And could it go down from there? Sure. Might even be a 50-50 chance that it's going to go down from there. But remember, in trading, if you're winning 50% of the time, as long as you're making at least twice as much when you're right as you lose when you're wrong, you can make a really good living. So if you see this ranging after a 90% drop and you want to take a stab at the bottom with a 0.5% or 1% of your portfolio, by golly, I say it sounds like a great idea, right? At most, you're going to lose $500 if you're trading with 100 grand and you got a 0.5% stop. But what's the most you can make? Well, if this thing pops, you can make a lot. Is it realistic to think, okay, I would have held it and sold for exactly 1,300%? No, of course not. But you know the simple way to trade this stuff? These altcoins, just like this. All right, you're risking 100%, so first thing you want to do is cash out half when it doubles. Why half? Because guess what? If you put in $500 right here, and it doubles, and you take $500 out right here, your 500 is now 1,000. Cash out 500, so you now have a risk-free position, and you got $500 left, right? That's how you do that. And then your next target, 100% from there. So right there. What happens when it gets up here? The 500 that you had left has now doubled again, meaning guess what? Your 500 that you had left has now 1,000. Cash out 500, you've got 500 left. At this point, you've got your initial 500 back, you've got $500 profit booked, and you got $500 left. And then when this goes up 100% from here, what do you think you're going to do? Are you seeing it? You just keep doing it. Every time it doubles, you cash out half. And in this case, watch. Right? So 100% from there. Hadn't quite hit it yet. So where would you be right now in this trade? Well, you'd have your initial $500 back, so you'd have a risk-free position of $500. You'd take 500 profit here, you'd be 500 up. You'd take $500 profit here, you'd be $1,000 up. And right now, you'd already have your initial money back, $1,000 profit in your bank or in your account, whatever. And what you had left would be worth about $750, because this 500 that you had left here would be up about 50%. That's how I would approach these. And there's nothing wrong with that. That's not gambling. That is straight up position trading. And if you do that and you do it religiously and you stick to the rules and you make sure that you're not just, guessing, catching falling knives, but waiting for ranges to develop, you can probably do pretty darn well, right? I will tell you all, the person that I learned this strategy from, he was one of the first people that I ever bought a trading course from, and it didn't mesh well with my particular trade style, except for this one piece. And this one piece is a strategy that he used to turn 1 Bitcoin, or I think it was 1.5 Bitcoin he started with. And in about 30 months, he turned it into over 30 Bitcoin doing this stuff right here. This is really effective. That happens to be on Shiba. And the thing is this, I don't know whether this coin's going to be good or bad. I don't know if it's going to keep going up or go down. I don't know, and I don't care. If you trade it like this, you don't need to worry about that stuff. But one thing that does concern me is, like my friend today was like, I'm going to buy X amount of dollars of it, and if it goes to 50 cents, I'm going to be mega rich. Well, he's not a trader, but he's been reading some stuff on social media and been seeing some stories about this, and he thought it was realistic to expect this to go to 50 cents. Well, anybody who's been trading any length of time at all will immediately see the problem with that. And if you don't see the problem, let me just point it out. So we take a look at CoinMarketCap, and we go down and take a look at Shiba. It's got a supply of 1 quadrillion coins or tokens. So if this was to go to 50 cents, that means it would have a market cap of $500 trillion. Are you seeing the problem yet? Go to Google and type in how much money exists in the entire world. Well, it says there's approximately $40 trillion in circulation. That's physical money, money deposited in savings and checking accounts. Money in the form of investments, derivatives, and cryptocurrencies exceeds 1.3 quadrillion. That means that more than 1/3 of all money, including investments, derivatives, and crypto, more than 1/3 of all money in the entire earth, on the entire earth, would have to be invested in Shiba for it to go to 50 cents. Is it impossible? Well, nothing's impossible, I suppose. Highly, highly unlikely. So if you're going to trade stuff like Shiba, I think it's great. I think there's massive opportunity in it. Just remember to pay yourself, okay? Here's another one. There's a stock, it's got something to do with Trump. I don't know. I don't care about politics. I don't even want to hear about politics. This one popped. I guess Trump's doing something, launching his own social media thing. I don't care. Whatever. This thing popped from the other day from $10 on October 20th all the way up to $175. And there was an article on one of the finance sites of a guy who had bought a bunch of it, and he's at $175. They interviewed him, and he said, "I'm still not selling. There's tons of upside from here." Well, now it's $70. Is there more upside? Maybe, maybe not. Nobody knows, and nobody will know until it happens. But right now, that thing's down 60% from where it was when he was bullish. Okay? And it actually dropped almost 70% from there. This is not, a one-time thing. Shiba, it's not a one-time thing. Verge, BNB, right? These are not one-time events. These happen all the time. And they happen in the stock market and they happen in crypto. There was one I pulled up. Oh, I wish I still had it pulled up. Let me see if I can find it. What's the symbol on this thing? I was doing some videos for my course itself, and I was looking at stocks that had big moves to teach some stuff, and this was one of the ones that popped up in my radar. So this is a stock that, back here in 1993, this thing was $25 a share. I have no idea what it is. I don't know what they do. I don't know anything about it. But it dropped, put in this bottom right around these old lows, right? Double bottomed and broke out. And from the low back here to this high was 3,910%. Okay? Now, to put that in perspective, watch this. That's versus US dollars. This is versus Bitcoin. If you were measuring it versus Bitcoin. $2,277%. That means if you put one Bitcoin into this in January of 2021 at the low, you could have cashed out almost 23 Bitcoin or almost 24 Bitcoin at the high. It smashed Bitcoin. Smashed most altcoins. Okay? I'm not saying go buy this. I don't even know why it pumped. What I do know is when I look at that stock, knowing nothing about what they do or what the company is, I can clearly see a technical reason that I would want to look for a position trade down here. Testing these old lows, got a double bottom, sure. We throw $500 in. Would I throw it in on this low? Probably not. On this one, I'd probably wait for it to close above that level, right? But same thing. Throw a $500 trade on that puppy. I say 500 because it would be 0.5% on 100 grand, right? Your stop loss, 0. That's it. You're willing to lose the whole position. And look at that. That thing is up over 600% from there, meaning that you could have taken profits, right there. There would be your first profit. Come on. First profit. Sold half. Now you got a risk-free position. Could have taken more profit right around that level. Now you're up 500 and cash your initial 500 out. Could have taken another 500 profit there, right around this level. So at this point, you'd have your initial 500 back, 500 profit booked, $1,000 profit booked, and you still have a position left that was worth somewhere around $300 or $400. This is not crypto. This is stocks. This stuff is not, quote unquote, once in a lifetime. And the sooner you realize that, the easier it is to avoid the FOMO. And I saw somebody one time saying, if you get a 10x return, you better take the money and run. I don't know that that's true on every single coin or every single investment, but be very careful about riding 10x, 20x, 30x type returns and being greedy and hoping for more. Those are gifts from the universe. So again, whole point of this video is I have no problem with, and who am I anyway? I'm some guy, right? Who the hell cares what I think? But if you do want my opinion is it's great. Trade whatever you want. Just make sure you're trading the chart. Make sure you're using proper risk management. And if you want to take position trades, by all means take them. And if you want to take, cash out half every time it doubles, it's a pretty proven strategy. It works really, really well. And it's pretty, stress-free, because you're not going to get stop hunted if you don't have a stop loss, right? They're not going to send it to zero and stop punch and then go back up, at least unless you're, it's oil or something, which was totally weird last year. But overall, just use common sense, which isn't all that common. Make sure you understand the market caps, and, when people are making ridiculous targets, make sure you understand, that, okay, this is how the math looks, that's not so ridiculous, or maybe that is pretty ridiculous, etc. And also understand that right now this market is very euphoric, and so things move very fast. But if things turn and start to go very pessimistic, they'll also move fast down, just like they did in March of 2020. And so you don't want to be taking huge risks. Like this friend that called me said, a friend of mine who doesn't trade made a $46,000 or something on that Trump stock. And I'm like, is he like super wealthy and he can afford to risk, a bunch of money? He's like, no. And I'm like, well, he's gambling. If you're putting in thousands of dollars and you can't afford to lose it, that's not trading, that's gambling, right? And eventually, we all know the story of the gambler who goes to the casino, $500, gets up 10 grand and goes home broke. Gambler's mentality only leads one place, and it's nowhere good. I'll go ahead and wrap the video up there. Please remember, I am some guy sitting in a spare bedroom. That means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, or precious metals. If you haven't yet, stop now, give the video a thumbs up, make sure to subscribe to the channel, and make sure to check the description for a link where you can join Patreon for just $7 a month. This is James with Crypto Common Sense, reminding you to please trade safe.